pullback areas that hold. It's not a coincidence. It's all programmed. And whether you think the market sold off a little bit more today because of the economic data, that's the cover story. The market was going to do what it did today no matter what, right? And then again, you're always a faux show, bro, away from having to cover, which is why it makes shorting very difficult. But we're still in the downtrend. Still loving my short. But, if you took some profits, now we could get back into the cheaper price. I don't mind trading. What's up, YouTubers? Good morning. Really hasn't been much to talk about today, but we can say one thing. We have a trade. If you're just joining us, hello, my name is Kenny Glick. I have a trade that has worked every single time, and we've just breached the 1300th in a row. And if you think I'm joking because of my playful, sarcastic tone to my voice, I am not joking. For the last 4 years, I have a trade that's been working pretty much since 1997. But now that I have combined it with chart pattern recognition, VWAP, and that trade all rolled into one, we have now done 1,300 trades in a row for profitability on this one particular setup. And that setup, my friends, is known as the 1 minute multi-day VWAP reversal, as you're looking at it right here on the QQQ. And the reason this is obviously my favorite trade is that I believe a market correction / crash is coming. And this is what it's going to look like. It's going to start innocently with a little complacency, and then a VWAP break and a VWAP test and a rollover, and then a Fat Finger Freddy trade. If you guys know about Fat Finger Freddy, the market being rigged, it accidentally shows you where it's going to go. Anytime, a lot of times between 8 and 8:15 in the morning, you get an anomaly print. But it's not an anomaly. It's actually the market that's pre-programmed to do something, slipping. And it accidentally slips between 8 and 8:15 almost. I would say 60% of the time we're getting these out of money prints, right? You got one here and it went there. You got one here and it went there. And then you're getting confirmation of just your classic downtrend. This is your prior day VWAP. This is your 1 minute VWAP. And then you go back to the price action of the Qs themselves. 600, 602.50 gets you 600. 602 gets you 602.50 gets you 600. Here we're thinking 597.50, but we place our stop at the price where it broke down from, which is 600. And now our short for the day just came to an end. But during this up move, I'm positioning myself for more selling. And normally I don't do much of this, but I'm pretty damn convinced I'm going to be right. And there's going to be some more volatility. So I've been setting up put spreads. I'm long the SQQ. I'm selling puts on the SQQ. And I'm doing put spreads on the QQQs themselves for Friday, for Monday, and for next Friday. But the easy answer, if you're unfamiliar with options and you're scared and you're going to lose some premium, the easy way to play this right now is I'm long SQQ. I believe these are going to $90, and I'm willing to risk about 4. And I'm also, just because I love myself some hedges, I'm going out to the 27th, right? And I'm going to take in, that's me right here, 80 cents. You're going to give me 80 cents for an $85 call? Would anybody be unhappy selling these at 85 on March 27th? I wouldn't. So I'm going to take in that premium. This guy wants to pay me 80 cents already. Thanks. Helps me pay for owning the stock. I don't mind selling some at 85. So that's $1 or 80 cents. It's an 80-cent less risk that I'm taking owning this. So I'm selling some of these calls, but I'm also selling puts because I don't believe they're going back below 66. So I've been selling these. So I'm a seller of 66 puts. I own the SQQ. I'm selling the $85 calls. That's how I'm playing that. I got a put spread on the Qs, which we already cashed out of some today because why not? And I'm reloading. Normally, I don't take trades with me when I go on vacation, but I think something bad's going to happen. And again, I'm not committing a large amount of money, and everything I'm doing has been paid for by the trade that never fails. So let me rewind for a second. I don't care if the market crashes while I'm away. I don't care if I'm right or wrong. I don't care. I don't care about what these companies do. I don't care about inflation. I don't care about the president. I don't care about anything. I care about this trade right here on Lulu. That's what I care about. I care about that every time I come in and I have a trade that I'm thinking about taking, it keeps working. 1,300 in a row. I don't need to be right about whether this market crashes / corrects while I'm away. If it happens, great. I'll make about 20 grand, which would pay for the trip, which would be lovely. If I'm wrong, I'm probably losing 5 to 7 grand. But that's only on the options. That's why my main trade is probably going to be this SQQ long, because there is no expiration. I could be wrong, but I could trade myself out of it if I'm wrong. If I'm right, I make money. If I'm wrong, it's not going to be so bad. You buy out of the money options and you're wrong, it's 100% loss. It could be very, very painful and terrible. And the worst case scenario is, let's say the market goes down a little bit and you bought options too far out of the money and you don't make any money. And even if you're right, that's why options trading is extremely hard, because you got to get the timing right. You got to get your strike price right. And you got to not, and you can't overpay. It's a very difficult trade. And that's why if you're going to take the outside, I keep saying outside, out of the money, take in some premium to help you pay for your gamble. That's why even with the SQQ, I think they could go to 90. But I don't mind selling some $85 calls for 80 cents. Because if I'm right, the SQQ is about to go to 90 bucks. Because that coincides with the Qs going to where I think they're going, 570. But if they break 570 when I'm away, because I'll take 570, that's really be awesome. But if they break 570, you got another 15 points to the downside, possibly 17 more points. And that's why I'd rather be just long SQQ. I'll hedge a little bit of it. I'm selling puts on SQQ. I'm doing put spreads. So one of my favorite plays, we were just doing some math here. I don't mind laying out $9. So I'm going all the way out to next week's. So I got some for this Friday just in case. I got some for Monday just in case. But I'm going way out. I'm going out. Now I'm going all the way to next Friday right here. Right? So I'm gonna pay up for these because you're paying for premium, right? Sorry, those aren't the ones. Oh, maybe they are the ones. These are the ones we were about to buy for 9. Now they're at 7 and change, right? March 20. Just gotta make sure I got my date right. Hold on a second. I think I'm looking at the wrong one here. March 27th. Those are the 26th. We want to be. It's March 27th is the one. All right, let me make sure I got the right one on my screen before I start putting these on. March 27th, 9 days. March 27, 600s. Oh, no, they're still $9, yeah. So they really haven't moved. So I'm looking at the wrong chain. Why does it say I'm looking at March 26th? All right, so I just need to scroll one more day. So I'm going out to next Friday. There they are. This is next Friday, 27th. Sorry, there's just so many contracts here. There they are. So these, I'm buying the 600s, right? But think about what you're doing now. Let's say the market goes nowhere for the next 9 days. You're going to lose $9. That's a pretty terrible trade, right? But I think the market's going to get slammed while I'm away. So I don't mind buying some at 9, but I have to take in some premium to help me pay for these because it's a lot of money. I don't want to pay 9. So I'm going to sell some puts to help me pay for those 9s. So I'm buying these at 9, bang. And then I'm going to go down here where I think the market's going to go to, which is that 570 area, right? And I'm going to sprinkle in some here for 2. So now I'm only paying 7 for those options. I get a 30-point put spread for $7. So if I'm right, I'm risking 7 to make 30. Right? And then I'm going to sprinkle in some 65s and some 60s. And if they're going to pay me $1 for a 556, I'm going to hit those 2 to help me pay for those 600s I'm about to buy at 9. And that's that plan. And now here's where I was going to say something stupid. I'm going to probably sell more puts than I own. So it could get nasty if the market actually does crash more than 40 points. So let's say I buy 2600s. I'm probably going to sell at least 25, maybe even 30 out of the money puts to help me pay for the ones that are at the money. Now, it could be a disaster if the Qs were to go down to like 500, because then I'm going to own some Qs because those puts are going to be put to me. But those $600 puts will offset anything I'm going to be losing. And again, if the Qs are breaking 550, somebody just call me. Call me. If we're below 550 while I'm away, somebody better call me. Don't worry about the time difference. Just make sure you call me. Stop what you're doing. No, but actually, call me if they start breaking the yearly VWAP. Because if they break yearlies, man, this is exactly what I think is going to happen here. 570, I think, is inevitable. But the question is, then what? Because if we don't hold the yearly, we got the real support down at 552. And then if that doesn't hold, and you look at the 2-year VWAP, the 2-year VWAP is kind of really where that last double top was. It just seems so easy. It's only 65 points. That's a 10% move. And that's not even a crash. Remember, that's just a mini correction. A crash is 20%. So let's stop calling it a crash. I'm just looking for a mini correction. This is 4.5%. There's 6.5%, and there's 10%. You telling me the stock market can't get back up? They can't fall 10%? Sure, it can. And when it happens, it's usually going to happen in 2 massive, nasty red candles, scare the shit out of everybody, find support, and then we start to rally. So I got to be involved. There's no way I'm leaving this country without being short some Qs. And I don't normally do this, but as my wife says, well, if you're so convinced, then put some money on it. So you're not bitching and moaning while the market crashes while we're away. Well, yes. I'm going to listen to my wife, and if the trade doesn't work, we all blame my wife. Right? Every trader needs a scapegoat. So remember, if the market doesn't crash, and we all lose money on these SQQs and put spreads, you blame my wife. But remember, now we're bringing it all home now. This whole entire endeavor that we're about to do has been already paid for tenfold. From the Qs short from this morning, the Lulu trade that you loving, kicking ass on this wonderful trade that never fails, 1,298 in a row. And then you went with the DocuSign for 1,300 in a row. Thank you very much. And 1,301 now, if you were watching Faux Show Bros and VWAP breaks. There it is. Wonderful trade. Again, DocuSign. And OKLO really wasn't that special. But listen, if you caught that first faux show, you had to sell it. And then the real faux show shows up. You got paid. Blue line, orange line. This one you had to sell out of each time. It's not always going to be so easy, just going right to the orange line without having to do something. But these are phenomenal trades. And these 3 trades, I didn't do the OKLO, but the Lulu and the DocuSign pays for this stupid idea about going short on a whim that the market might correct or / crash while I'm away. And that's where we're at, my friends. My name is Kenny Glick. Don't forget to tip your bartenders. And if you are driving, don't drink. And if you're drinking, don't drive. And your bartender's name is Joe Steele, otherwise known as Solid Jello. And if you're joining our NCAA tournament, send him $50 right now. He's the gatekeeper. And if you want to be a part of our pool, here's your link. Well, that's too big to fail. If you haven't watched that, watch that. I always watch The Big Short and Too Big to Fail and The China Hustle when I'm putting on a big short position. Gets me inspired. But if you guys are interested in joining us, hold on, let me get you the link. It's $50 a man. First prize takes most of the money. Second prize, you'll get something. Third prize, you're fired. Third place is a set of steak knives. All right, hang on a second. Let me get this. Well, if you haven't seen Too Big to Fail, there's the link in the YouTube channel. You'll thank me later. Hello, YouTube. Welcome. This is the guy that's been talking to you this whole time. I know it's not what you expected. I wish I was better looking. I tell you, if I was a handsome man with hair, with a big head, I probably would be famous already. Small head, bald. I got everything working against me. Did you ever notice that people that are famous have large heads? It's because they emote better on film. You don't see a lot of small-headed people that get famous. It's true. Ever see the size of Jay Leno's head? 2 times my head. Anyway, first round, I'm going to bet against Georgia because they disappoint me every year. I'm going to go against Georgia, but what I like doing is I like taking 14 teases. I'll take 4 of the best teams, tease them all, tease the tease. I do opening round, my favorite. I have like usually 25 bets on. So I usually bet against the teams that I root for. So it's a toss up with St. Louis. I don't know anything about it, but Georgia has been disappointing me every year. So I'm going to probably bet against Georgia. And even if they win the first round, they're going to go up against Michigan or Duke. In the second round, it's over. I hope I'm wrong. That's why I love emotional hedging. I like to see Georgia make it. I haven't even looked at the spreads. The only time I look at the spreads is when I do the teasers. So I do a 14 tease, you get 10 points, I think, in basketball. So you get to play with 10 points. Or another bet that I like doing is I just take the 4 big favorites and I parlay them because that's the only way you're going to make money because they're usually minus 350, minus 400. So if you take all 4 of them, obviously they all have to win, but now you're getting paid instead of laying out $450 to make $100. Now you'll make a little bit of money on it. But if you want to join here, let me give you the link. Copy of the link. The password is Ipswich Clams. So let me know if that works. That should bring you to the window that opens up our tournament. It's Hit the Bid 2026. And the password is Hit the Bid, one word, all lowercase. And if you want to join for fun, join away. If you want to get paid, send $50 to Solid Jello. And his PayPal is, hang on a second. I should know this by heart by now. And as soon as you send the money, you could say goodbye to it because Solid Jello is going to take the money and go on vacation and no one's ever getting paid. Solid Jello is, by the way, if you don't know who Solid Jello is, you'll meet him this week while I'm away. He is the shining beacon of hope for all of you guys. He took this VWAP thing that we found in 2012 and has run with it and has become a master of it himself. And he'll be guiding through the wonderful world of trading while I'm away. might not be doing the YouTube or the TikTokers. Dungeon will probably be shut down. So make sure you're in the main room. We got Chicago Sean coming on. We got Straza, JC. We got even Phil. Don Corleone's coming. Minotaur. Vaz will be here Monday. Don't miss the Vaz show. Vaz, if you don't know, the lovely and talented Olivia Vaz. She's into volume profile. She talks a lot about S&Ps, does the trade the close thing, so she'll be part of the show. So it should be good. Covering all the bases while I'm away. And let me try to get solid. I should know this. Where is it? Is it Solid Steel Solutions? Send $5. So here, I'll send you $50 right now. Let me know if it works. We're done. 50 00 cool send. Okay. Summary. And there you go. I'm your first victim. Let me know if you got the money. So I don't know the what is it? Is it Solid Steel Solutions, all one word? I don't have the link. It's just showing me your name. Anyway, here's our man. He's going to be the keeper of the realm. So if you want to join, search that guy out. This is our guy right here. I don't know. I just volunteered you to be the keeper of the money. Congratulations. He's like, what the hell are you doing? You got the job now. He'll be absconding with that. He needed a new guitar, so everybody who sends him $50, good luck. You'll never hear from Solid ever again. Oh, man, we're having too much fun today. I love it when a plan comes together. You don't want to be the guy? Oh, all right. I'll be the guy then. All right, yeah, listen, we'll use my old PayPal account. Seriously. You don't want to be the guy? All right, well, I just send you $50 anyway. Go get yourself a cup of coffee. All right, listen, here, we'll do this one instead. Here, ready? THANOS43 @AOL.com. That's me. Thanos43 @AOL.com. You want to join? It's $50. First prize will get most of the money. Second prize just a little bit. And third prize, you get a set of steak knives. All right? All right. And don't worry, it's not rigged. I came in last year, which was kind of embarrassing. I was in dead last. So anyway, there you go. That's where we're at. 11:36, and I'm all packed up. Just hanging out. Not much else going on. Anybody got any questions, concerns? Dungeon dwellers, you know what's happening here? Unless Solid launches the dungeon, there will be no activity in the dungeon. This would be a great time for you guys to step up into the fresh air. I know you guys, some of you guys, I appreciate you, by the way. I got your email. If you're not ready for the, just make sure that you got my email address. We'll talk when you get back, I get back. And I do want to thank the 3 or 4 people that already joined up. Thanks very much. Questions, concerns? Let's go back to watching the IPO. All right, so we got this 60, right? So here's Schwarmer, SWMR, right? Still pretty damn, look at what it's doing here, right? 60 got you 62.50, but now you got to be looking 5-point increments. So now if you're trading this stock for real still, right, you're not thinking anything other than $80 still, right? But you can't trade it without using 5-point increments. Not for everybody. It's a lot different yesterday when we were buying this thing at 22.50. You know, you could use 250, maybe even $1. The higher priced it gets, the bigger the rug pulls are going to be. Still think the thing goes to 80, but obviously it's a whole different risk parameter since it held prior day VWAP this morning, and you got a couple of faux show bros. You know, you already had the bro part. Doesn't mean it's not going to 80, but obviously I would have loved to see everybody been in this thing at $35 or 40, or at least that septuple break at 45. But generally, when IPOs go parabolic like this one has, 22.50 gets you 25. But when you break through the 25, you generally do get into the 30s. When you get into the 30s, more often than not, you get to 50. Then it becomes something different. If you get into the 50s, most of the time your stock goes to $80. And that could be happening today. Now, for the sad part. This stock, I don't trust it. It's 3 million shares and a $5 IPO, $15 million IPO. It just smells like a scam. But worse is, even if it's a real company that does make software for drones, great. When they do an offering for 3 million shares, it could be days away, maybe even this afternoon, where they do what's called an offering. And they flood the market with more shares, crashing the stock. One of those things is going to happen here. Either, again, with 3 million shares out there, look, the stock is traded 5 times the float, right? There's always a guy. Remember, go watch Wolf of Wall Street. There's a guy in a rat hole sitting there with most of the stock. Steve Madden's out there waiting to dump this stock on you. You don't know when it's going to happen, but it's going to happen. And also, stocks don't go from 5 to 80 without some vicious pullbacks. But right now, every pullback's been a buy. This thing is on it's just sick. I still don't think it's going to end well, but right now, the only thing that you're concerned about are these last 2 pullbacks, which would be stops, 55, and then the 50, basically. But if this thing breaks 65, the next leg up should get you 80. And here's the fun part. 80 gets you 120. So if this thing gets literally past 65 and gets into the 80s, you ain't thinking 82 or 85. You're thinking another 40 on that stock. And it's just insane. Because if you don't know about it, it's a software drone company, blah, blah, blah. Maybe it is, maybe it isn't. I don't know. But I read about this yesterday. There's 3 million shares at $5. It's like the scammiest scam. We used to bring stocks public with 3 million shares at $5. And they were completely all illegitimate companies. It never went to $62 because, you know, we would control the entire float and crush you before the stock ever went up. But it's incredible. And just like yesterday, the stock's been alive for less than 24 hours. It's already part of the VWAP algorithm. So here's yesterday when we were trading it. And again, I didn't even know about this existence of the stock until somebody brought it to my attention. It already gone from 11 to $22. But then I was like, hey, if it breaks $22, it probably goes to 25. And then 25 got us 27. We traded it. But then this part happened. We figured the pump was over. Here's the dump. But then the dump became a fake out, shake out, VWAP jiggle, holds it from on top. Wait a second. What the hell is happening here? This stock's acting like a real stock, and one hold of VWAP, and she gone to $35. And then our projection was to get to 40, and we were in it. And this was very disappointing because it hit 40, it hit 40, it hit 40, it hit 40, it hit 40. Rug pulls us. We didn't get out. Hits 40 again. I'm thinking, all right, we're definitely breaking 40. And it rolled. Had to sell it. And then if you just went back and looked at it, where'd the selling go to? Back to VWAP, another faux show. And from $30, we got stopped out around 36 and change, which was disappointing at the time. It ripped to 42.50 in the aftermarket, only to rug pull it again to 30. Faux show, bro, in the middle of the night to 53. And then this morning, the crash from 53 back to prior day VWAP, which now gave us a new reason to believe. And then another one, and another one, and another one, and a range break, and so forth and so on. And now you're up here thinking possibly $80. It's just crazy. It really is crazy. And while we're talking about this, let me just give you a brief reminder where WNW is. Remember, we were trading this thing on Monday. Remember trading WNEW? Remember way back? Remember when it went to $13? It's at 20 cents. If you're trading, this ain't like trading the Qs or Microsoft. These things go against you. You have to sell them because they're going to go to zero. You guys remember VSIG from a couple of weeks ago? Remember we were loving this stock? Thing was ripping all the way to $35. It's at $1.69 now, going to zero. Right? Pump and dumps are awesome. But these stocks will crush you if you don't play by the rules. And the rule is sell into the move, raise your stop. Don't be afraid to get stopped out. Like getting stopped out of Schwimmer yesterday at 35.50. Not what I wanted to happen, but I ain't staying in the name when it rolls over. And granted, it came back, but when they don't come back, they go to zero. Right? What was the other one? We're trading Craig. Anybody remember Craig from yesterday? We were killing it on this name twice. Remember? Faux show, bro. Woo. Faux show, bro. Wee. And then it rolled over and died. Stock was $2.66 yesterday. It's 66 cents now. And it'll be at zero a couple of days from now. So, again, there's so much going on in this market. You got the pump and dumps all over the place. And again, not convinced this isn't a pump and dump yet. It probably is. But right now, you're still in the pump until that dump comes. And it's going to come. And if you're trading it now, the only way you could really remain in it is using 5-point increments, which is not for everybody. Usually you don't have to risk 5 points to stay in a $60 stock. But that's the nature of this beast right now. And just take a look at my friend UVXY, right? The market's kind of like lazy right now. It's kind of boring. Why is UVXY up 10%? You want to know the answer? Because the market's going to crash Friday. There's no reason for UVXY to be up 10%. The market's really not that unstable today. That's telling you something. Telling me something. Telling me it's giving me enough confidence to believe that there's going to be some more selling. And that's where we're at right now. So you got crazy IPOs, you got pump and dumps, you got rippers, you got rips and rolls, rolls and dips, dips and rips, faux show bros and blow off tops. Can't beat this market right now, especially for the lowly day trader just trying to get paid on a daily basis. Shit, so much going on. All right, so don't send Solid the money unless you just want to send them some money because you like them, which you should. So use my PayPal address. So it's $50 for the pool, and you'll be lucky if you get the money from me either. And that's where we are, and that's the way it is. That's the way it is. Is that Walter Cronkite? Anybody have any questions, concerns? The precise way to identify a faux show bro, right there. Well, then again, it's a mini one. I like to see the leather candle below, but you see where it broke out from and tested it, and then it broke and it came right back. That's a faux show right there. So when you see a significant moment be broken and then comes right back, fake them out, shake them out, right? And the reason that this trade, when you have the orange line as the shakeout area, you know you're onto something, because the orange line, when it's below the blue, quite often acts as support for the pullbacks. So if you get a fake out, shake out to orange, and then it starts to rally, you're buying it down here, right? So, but then you see how there's the prior low, holds it, breaks it, comes right back, fake them out, shake them out, VWAP break, rallies, gets rejected at that same price, but then they try to do it to you one more time, fake them out, shake them out, back above VWAP, holds it from on top, new break, that's us buying it with limited risk. Because now here, if you're buying that break, you're looking at VWAP, and again, still risking at least 2.5 to 5. You know, you can't get around trading with this stock without risking 5. But down here where that broke the 45, you had VWAP at 42, and the fake out area was 41. So at least there you knew exactly what you were risking. VWAP, prior low. If it would have rolled over, you would have sold that VWAP, and then your last stop would have been here. But luckily enough, you got paid. And now the long trader who hasn't sold is still kind of waiting to see what happens next on this stock. What will I do if the market doesn't crash? Nothing. It's just at the end of the day. Who cares? I'm really not concerned. What I'd be concerned about is when these reversals stop working, which it's been 12 years since you looked at me. It's been 12 years, right? And the trade now works every time it shows up. I don't care if the market crashes ever. But what I would love to see the market stay in this range for the rest of our lives. You give me Alcoa going between 57 and 68 for the next 2 years. You give me the Qs between 582 and 635 for the next 2 years. We're the only ones making money trading this monster range. That's what I really want. I don't care if the market crashes on Friday or next week. I'm just preparing for it just in case it happens. I just want this to keep going forever. Whatever this is that we're doing these last 4 years, may it last forever, because the trades are working every time. You get action from every angle. VWAP works better than ever. And it's taking the hardest thing to do in life and making it just a little bit easier. You know? And that just a little bit easier is a lot, because trading is freaking hard, because you're freaking out no matter what every time you put a trade on. But this, you know where the freak out levels are. So what's the freak out about? Freak out, right? I don't know. What do you want to dance to now? Anyway, I need more coffee. And then I'm going to go. Can't blast the music. Wait, hang on. I got to shut this part off. Hold on. It's not safe for work, kids. I'll tell you all about the orange line. Give me 30 seconds. I'll be right back. It's not that good of a track. I might erase that off my playlist. All right, so originally we used the blue line. That's the VWAP itself, right? And then Brian Shannon, who talks about anchored VWAP, he was talking about using VWAP on multiple time frames, right? And I haven't even got over the, I was just at the point where why would anybody care about VWAP in itself? So the first thing I saw as a shorter that stocks, when they would get back over VWAP and then hold the blue line, stocks would tend to change the trend. And that trade in itself saved me. As a shorter that was delusional, thinking that the market could actually stay down every once in a while, I started to notice that every time it breaks over VWAP and then holds it, for instance, just like right here, it gets over VWAP, holds it from on top, most of the time the downtrend was coming to an end. And that trade in itself saved me. So when I started researching Brian Shannon and get to know him a little bit more, he would anchor the VWAP and use it on multiple time frames. And I understood to some extent he was anchoring it to certain important areas, right? But I didn't care to look 3 months down, prior or 2 weeks. I wanted to know, I'm a day trader, so I wanted to see how could I use multiple time frames on a shorter time frame. So it's still a multiple time frame, but the shortest time frame. So what you're looking at on my screen most of the time, let me just clean it up for you. The QQQ right here. So it's today's VWAP starts to form every day at 4 o'clock in the morning. Or now it's basically 24/7. But the blue line is today. The orange line is grabbing data from today, last night, yesterday's aftermarket, an all-day session from yesterday and the day and the pre-market from yesterday. And I just chose to grab that data set and I experimented with it. And then I chose a little bit less, a little bit more, and I just started futzing around with the data sets, grabbing 1 day, 2 days, 3 days, 4 days, 5 days. So we have a script now that grabs those amount of days for us. So the main chart is the 1 minute multi-day. So it's a 1 minute, 1 day. And then from careful experimentation, if I want to use the fancy word back testing, I guess you could call it back testing or front testing or doing the trade, just experimenting with for 3 years between 2012 and 2015, while I was getting my ass kicked as a shorter, I was learning a little bit more about the VWAP. And then finally by 2015, I realized, okay, shorting doesn't really work anymore. I better start trading what does work. And it's reversals on earnings reports and stocks that have a lot of volume work better. So the 1 minute multi-day reversal trade was born. Because when you get a stock, or in this case, it's the Qs, if you get through today's VWAP and a prior day, about 75% of the time you are getting a follow-through move. And that's all that day trading is about, follow-through. You get too much chop, nobody makes money. But the one trade that we first found was 1 minute multi-day break, almost 70-75% of the time you're getting a follow-through trade. And that's all you need to make money as a day trader. I got limited risk for decent rewards. Then I started expanding because one of my other trades was in gap fade on an earnings report. So gap fade is, and there's no fading today, but today it's the opposite of the fade. It's the gap down buy, right? So, well, let me explain what the fade is. So imagine for a second, you bought a stock and you were betting on the numbers that were going to be good. And the next day the stock is up. What do? You sell. That's how you take your profit. So in this case, it's the opposite, right? So we're looking at Lulu today. Why? Because they reported earnings. The stock is getting slammed, right? Just terrible stock over the last year. Pretty awful over the last 2 years. Pretty freaking awful stock if you haven't sold it. And you just wasted 5 years of your life, because now if you look at here's a 10-year chart on, and here's what's nice about VWAP. Once again, 10-year weekly. Who would even think to use VWAP on a 10-year weekly chart? I would, because it shows you the trailing support of VWAP exclusively. It's not a moving average, it's VWAP. And here it got rejected at the 10-year. It's rolling over. Now look at this. I could even look at a 20-year VWAP chart, just grabbing every amount of data, 20-year on a monthly, and it's telling me that this Lulu ain't so healthy because it looks like it'd be headed down to that 136. Irrelevant, right? But this gives you a heads up of where the stock is. And then you go back to the day. You know the stock stinks. It already had a monster move in the pre-market, and then it collapsed in the aftermarket yesterday. And then we come in. And what do we do for a living? We don't care if it's Lulu. We don't care if it's some drone company. I don't care if they make athletic wear for beautiful women, or if they make athletic wear for weird bald guys and nobody buys it. I don't know what the hell I'm talking about right now. It doesn't matter what the company is. The premise is, give me a stock that's gapped down on an earnings report. If it breaks the blue line, I'm buying it. And the orange line, if it's above the blue, you're looking at it as a first target to sell. But just like that other trade I showed you, if something goes through today's VWAP and the prior day, and it's an earnings report, for 4 years now, we haven't had a loss on this trade. Let that sink in, because that's the point where I think I lose everybody. Today, we just crossed over to 1,300 of them in a row. We haven't had a loss on this trade in 4 years. Now, am I saying I haven't lost money? You guys know what happened to me about 2 years ago in August? I gave back more money than I ever thought I would ever see in my life on one trade. Not a VWAP trade. It wasn't an earnings reversal. I just went completely batshit insane with some UVXY short. And then we had some Armageddon over the weekend with Japan, and I got freaking annihilated. It's not like I don't lose money. My last 3 swing trades, well, the last 3 would have been all right, but I lose money. Everybody does. This trade doesn't lose you money. And it could. And again, you just say, wait a minute. You just said it works every single time. It does. But sometimes you get paid, and then the stock rolls over and dies. So that's why you listen to the first part. It provides you a winning trade. That doesn't mean you're just buying it at 9:30 and holding it till 4 o'clock, la-di-da. That usually doesn't happen. It provides you a winning trade. You still have to do a little bit of work. But in this case, not much work needed on the Lulu trade. You came in thinking about buying it. Oh, you didn't want to buy it in the pre-market. All right, well, then it's breaking through the multi-day VWAP. So when we have a 1 minute multi-day VWAP reversal on an earnings report, 1,300 trades in a row have provided you a winning entry. And that is a trade that you got to be loving, because it works every time. And let's say you missed the first one. Then you go back to classic VWAP trading. If a stock comes back to hold the VWAP and doesn't break it, you got yourself a decent re-entry using the VWAP as your out. Oh, you missed that one? Oh, look, it comes back to VWAP and holds it. Buy it again. And then it goes back to the highs. Maybe you're a seller. Maybe you missed it here and here and here. But then it comes back here. Oh, Kenny, it's breaking VWAP. It's over. No, it'll be over if it breaks back below prior day VWAP. In this case, what did it do? It just went back to the same price it came back to earlier, giving you a fake out, shake out, VWAP break, new entry on Lulu. And now you're still in it because it still hasn't broke back under the VWAP. In a market that's kind of weak, in a stock that stinks, it's pretty damn good today. And that's all we care about. So if it would have pulled back to the orange line, that still would have been support. But the trade, the main trade, is when you got a stock that reports earnings that's gapped one way, meaning gapped up or down, meaning below the price that it closed at. So this officially was gapped down. And then it went through the multi-day into the green. Phenomenal. And then you got DocuSign. Look familiar? It looks exactly like the Lululemon chart. You know why? Because that's the trades we take. So this one, as I was working my Lulu, I almost missed this trade. I went to go check on it. I'm like, oh no, it just popped over VWAP and broke a new low and then came back. That's a faux show back above VWAP. And then I missed it here. I missed it here. I missed it here. I missed it here. But then it broke the orange line. I'm in. I ain't going to wait. That's a 1 minute multi-day VWAP reversal. I heard every trade works. I'm in. I'm in. And if I would have been wrong, the prices from where it pulled back to are your stops, clearly identifying the trade. And then you got paid. And then it rolls over. And where I sell on the way up is generally where I sell on the way down. So I got stopped out at 48.90. No biggie. Because I was in from 47.83. Sorry, what was the price I was in? 47.73 or something. 47.54. And I did buy some 47.83. But I was buying it on the way up as it was breaking. And I sold it into the move, got stopped out on the way back down. Could have traded it again here. Little faux show, little ass crack VWAP break. Butt cheek, VWAP break. Another winning trade. And in this case, it held the VWAP. You still would have been in it. Held it. Now you got VWAP and multi-day VWAP giving you support. Holds it again, but then it breaks blue and orange. Ugh, now you got to sell it. And that's it. You're just letting the VWAP tell you what to do. And that's why the Lulu trade's still along, because it never broke down. Right? And now you got to the inevitable price where I said you'd go to is 167. Right? What did you just do? Right there. 167. And when somebody said, why do you think it's going to 167 today? I said, because it went there last night. And the program that we work, because the market's rigged to price. So prices that were hit once before tend to be hit again. And when you have momentum in the direction of a price where you know it's programmed to go to, your job is to hang in there till it gets to that damn price. And look at that. It tried to get people out. But if you're using VWAP and multi-day VWAPs as your lord and master, you just made the most perfect trade that you'll ever make. A faux show, bro, 1 minute multi-day VWAP reversal gets back to aftermarket highs. Wonderful. And this Lululemon, this wonderful trade right here, pays for the quote-unquote dumb idea that this market's going to crash over the next 10 days. And that's where you want to be. Ladies and gentlemen, my name is Kenny Glick. I have a trade that works every time. Start there. Start there with the trade that works every time. So then you have the money to put on other ideas. And if you're like me, you'll start to notice that all those other ideas don't work. 50-50 at best. So why take them at all? Exactly. Why take them at all? Because if you're brand new at this, why not just stick to the trade that works every time? And that's the only thing you do. No swing trading, no call spreads, no put spreads. You're not betting on crashes. You're not buying out of the money puts on 2 weeks out. You're not doing any of that. You're taking this trade that works every time, cashing out and shutting the computer. And then maybe 2 years from now, after you do this for 2 years and you're like, wow, this is amazing. You want to branch out? You want to swing trade? You want to believe in a stock? Well, that's your problem. I don't believe in any stock. Because to me, every stock is GoPro. Every stock is Lulu. Every stock has a shelf life. There's only one Eli Lilly. There's only one Apple. And I haven't picked one yet. All my stocks seem to run out of steam inevitably and roll over and die. I'm done. If I'm going to be an investor, it's the QQQ and some silver, and that'll be it. Picking individual stocks, I am not good at it. I don't know why. I should. By just the law of averages, I think I'd pick a couple of winners every once in a while, but I don't know. I don't. So I stopped trying. You know, every once in a while, I have a stock that cooperates, like Alcoa. I've been trading that pretty damn well for the last 15 years. But man, I have never experienced something that works every time it shows up. Right? And if you could literally be disciplined enough, and I'm a victim too, like I just said, I lost 10 grand on that NAVN trade. Why? Because I'm an idiot. That's why. Because I wanted to be a swing trader. Ooh. I thought I caught the low, and I did. Stock had a faux show, bro, on earnings day. I'm in this thing at $25, the worst trade ever because I got some garbage IPO put in my account by public. Long story short, I bleeds me to death, and then waiting for a chance to maybe dollar cost average my way out of this dog shit. I nailed it. And it gets back to the lifetime VWAP where I'm thinking, all right, I nailed this thing. It's going back to $22. And here I'm thinking, yeah, all right, let's buy some more. And then I had to dump the whole freaking thing because there's no way I'm letting it go back below all-time lows with me still in it. At least I saved myself another 12 grand loss. But this is what trades do to me when I swing them. Or worse, SRAD. Where I'll be in the name for over a year and a half and still blow it. Pathetic. 2 years I was in this thing. Or not exactly 2 years, but here, look at this chart. I learned about this company's existence at about $15. Started nibbling on this break, the Andy Dufresne. Loving it. Trying to get my kid a job there. Multi-year VWAP break, range breaks, woohoo. Going back to all-time highs, yeah. Tariff, buying more on tariff day, woohoo. Yeah, I'm a hero. And then what happens up there? It gets upgraded. I'm like, oh no. And then it gets upgraded again. Oh no. And then it gets upgraded a third time. I'm like, you know what? 3 upgrades, I got to start selling the stock, which usually doesn't make any sense to people because analysts are not your friends. They're upgrading the stock because they know they're about to dump it. So they upgrade it to cushion the blow for their hedge fund buddy who paid them off for the upgrade in the first place. I know that. So at least I sold some up here when they were upgrading it. And then inevitably it starts to roll over. I had to eat this trade. And inevitably I had to sell the whole damn thing because there's no way I'm letting it go back below 25 without getting out. And I had a beautiful trade. And I was buying more. I even bought more at 25. That's why I had to sell 25. But I turned this lovely trade in that I was in for a long period of time into pretty much a flat nothing. No more of that. So for me, nothing really works as well. Obviously, nothing works better than 100%. But nothing works better for me than intraday trading because at least I have that edge with VWAP and price action. and truly believing the market's rigged and exposing the rigging to the market. But once you hold something overnight, you're back in the hands of the matrix with no control. And that's my story. And that's why I don't like swing trading or investing. Right? Like even going back to this stock open. It's fantastic to trade, but these delusional psychopaths that were buying this stock at $10 that are still in this stock since last September, they look at this chart and they go, yeah, this is fantastic. Yeah, it's in an uptrend. You know, any day now, it's going to $80. Okay. Good for you. To me, I look like a stock that's down 50%, that's going sideways, about to roll over and die. But it's fun to trade. I said the Lulu. And that's it. Now we just rinse and repeat every day. And, as a shorter, just remember the mantra. Market never goes down. Stocks go down. The market doesn't go down anymore. I don't know how to interpret it. It doesn't make any sense to me, but that's where we're living. What's that saying? The don't fight it, join it, don't something or other. That's what the market's all about. It seems to me 90% of stocks, literally, like almost let's go 80%. It seems to me 80% of stocks stink, right? But the market tends to always go up over any extended period of time. But if you pick 5 random stocks, 3 will be awful, 1 will be okay, 1 will do nothing. But the market will be up every day. That's why the stock market drives everybody nuts. That's why when you see this is the next something, when they say this is the next Microsoft, no, it's not. Just buy Microsoft. And that's why intraday trading, you don't have to know about most of that stuff. It's not about what Lulu does, right? It's not that they make hot pants for cougars. What? It doesn't matter what they make. It matters that they reported earnings and it's breaking over VWAP and prior day VWAP. And algorithms love that stuff and the stock tends to go higher. And you're going to try to make as much money as humanly possible on Lulu today. And now, here's where you can become a swing trader, because most swing traders are failed day traders, right? So they buy Lulu, it starts to go down, they don't sell it, and they go, well, I guess I own Lulu now. I hope it goes up tomorrow. And now they're a swing trader. And then 2 weeks go by and Lulu still stinks, and they're like, well, I guess I'm an investor now. And that's how most of these most day traders blow up. One trade where you knew you should have sold it, and then you're like, oh, let's see what happens tomorrow. And then tomorrow becomes next week. Next week becomes next month. And you went from not taking a $270 loss on something, and it turns into an $8,000 loss. That's exactly how everybody blows up. There will be losses in day trading, but they're generally small losses when you're trading properly. Jesse Livermore, right? Small losses are inevitable. Big losses are your mistake. Small losses are inevitable. The big loss is your fault. And that's why I'm here. And that's why I never leave. Even when I'm about to go on vacation, I'm hanging out here for 4 hours now. I got about 45 minutes I could chill. I got to make sure I got all my stuff packed and ready to rock. Oh my God, a Jumama trade. Jumama. Oh, the Jumama. There's this one guy on the internet that it's his favorite stock on the planet, right? And this maniac, right? And I love this stock because it does tend to get squeezed, and then it's just a 20-year pump and dump, right? I think they make rugs. They're like the rug maker and from Germany, but they pretend to be the Amazon in Africa. I have no idea. I don't know what this company is, but man, it's been awesome to trade for the last 20 years. Pump, dump, pump, dump, pump, dump, pump, dump. Right? This is COVID, right? This was the COVID day. Yeah. It was around before that. Oh, it's only been around for 2019. I thought this thing came out 2010 or something. Huh. No, 2019, the IPO. So anyway, pump, dump, massive pump. This is when everybody was getting paid with Cathie Wood when nobody could lose money as a long trader. That's when Cathie Wood got her fame. And then the Cathie Wood top, the crash, Andy Dufresne, we got paid on this one, second one. But my point to my story was this guy that loves Jumama because he thinks he knows about the company, he didn't get it right because the company's good. He didn't get it right because he did some fundamental analysis. The market went up for 18 straight months, and this came along for the ride. That's why I hate bull markets, because I don't mean to be, if this is you that I'm talking about, every moron who thinks they know something gets validated. And I'll affectionately call Tom Lee a moron. That's why I don't like bull markets, because people make heroes out of Tom Lee and Cathie Wood when they're 2-bit bull market cheerleading hacks. Change your tone. Let me know when the market's going to sell off. Let me see if you know what you're doing. Be savvy. Tom Lee never changed it. Oh, today, it looks like there's a bottom in, and we're probably going to get the all-time highs before the end of the year. And he's always right, because the market never goes down. It's not like Tom Lee's a genius. Everyone's a genius in a bull market. That's why I don't like them. You give me a sideways market where it's a little bit more difficult, but it's less difficult for us because we're trading the ranges around VWAP. That's where we shine. So if the market stays in this fantastic trading range, and by the way, I would not be buying this Jumama. It looks like it's about to roll over and seriously go back to probably $5. Yeah, that's nasty. That's terrible. You held that VWAP and then you lost that battle. And now you're looking at probably the yearlies. Yeah, you're under the yearly. Ain't nothing good about this right here. So, but that's the thing. And that's why I love being a bear. I love being bearish. I love being skeptical. I love being jaded. I love being, well, some people still think it's conspiratorial. That's a word, right? People still think the market being rigged is a conspiracy. I prove it every day. You tell me Fat Finger Freddy didn't show up today and the Qs went right to it? People are like, that's just a coincidence. It's such a bunch of bullshit. Is it? Well, it keeps working. Because when I was shorting the Qs on this rollover, and then they start to rally and they start to roll over, I'm like, all right, here we go. And then it fat fingers. I'm like, oh, we're definitely going down now. And that's where we went to. And look how that became a very specific area. And that's where I pretty much got out of my short. Again, I got reshorted again. But for me, pre-market short was over right here as it got back above the Fat Finger Freddy. And, then you had the economic data, blah, blah, blah. But nothing would please me more. And I'm not saying this, I want physical harm to come upon anybody. But I would like to see Tom Lee pulled out of the freaking stock exchange like Mortimer on a stretcher. Enough of that guy. Same shit every freaking interview. Oh, yeah, well, the bottom is in and we should rally into the end of the year. You think? Same story every time. Well, that's a great comment, Brian Harris. At least Tom Lee doesn't have to predict crashes on a specific date and then say it doesn't matter. But it doesn't matter. See, you're making my point, Brian Harris. It did happen. We already cashed in. We've been cashing in on these puts for 3 months. It doesn't matter if it happens. We're in the middle of it. Are you thick or you don't get it? We're in the middle of it right now. It's happening. The short is on. We're already making the money. So I guess my prediction does matter. What I'm saying, it doesn't matter if it does happen because the trade that I take mostly works every time. Do you get that part? I've already won the bet. See, now we're already in the milking stage. So if it happens, fantastic. We'll make more money. But we've already made money because it's happening. We're in the middle of it right now. Do you get that? Or maybe you haven't been paying attention over the last 6 months where I've been saying it. That led up to today. We paid for this trade 40 times over. Do you get that point? Do you understand I got a trade that works every time? Do you understand that the trade's paid for? Do you understand that we came in short today? Did it work? My prediction already worked. Are you missing out? Do you see where the Qs went from 607 to 600 today? I won. Prediction done. I've won. Now I'm just hanging on to some more in case it goes down some more. You get that point? No, seriously, that's a real question. Do you get that point that we're in the trade that I've been talking about? So my prediction already happened. Do you get it? You don't, right? Absolutely. NQ futures were a massive buy Sunday night because they held prior day VWAP, just like they did today. There's that 5-day. It's important. But here, look at this trade right here. Well, I'd have to go back on that specific day. So that's 315. Why is it? Oh, it's a 3-day, I guess. Let's go back and show you that one. Right there. So I was predicting, you like that? I was predicting that the market could go down big over last weekend too, because we're in a market that's in flux. The futures opened up green, right? And then they start to roll over. I'm like, oh, maybe I'll be right about this. And it starts to roll, but then it comes back. And here is where the bull market showed its face again. NQ futures, gaps up, rolls over, looking like they're going to roll. They never break the lows of the day. And then right here, the prior day VWAP acted as support, back above the 1 minute, reason to buy, and you got paid right into the next session. Into the Tuesday rally, into the Wednesday gap up, into what we're doing right now. That's why predictions are pointless. Get it now, fella? You feel what I'm saying, chief? And by the way, if you're going to say something negative, right? Hey, remember when I predicted Lulu would get to 167 today when the stock was at 156? Remember that? Buddy? Remember that prediction? Pal? So go get your crystal ball out and go hang out there and put your trades on from the crystal ball because that works out fine. Friendo. Come on, where's the snarky comeback? Nothing? Nothing? You're dismissed. Dude. Nothing. I don't get an attaboy when I predicted Alcoa to buy it at 57.50 for a 10-point move. Nothing there. By the way, AI just told me that chief, pal, and fella are informal, often masculine colloquial evocatives to use it addressing somebody similar to buddy or dude, but usually used in a condescending or patronizing, depending on context and tone. Are you catching my context and tone there, sir? Buddy? Mate? How's it working out for you with your predictions there, bro? Go buy some freaking Kathy Wood fund. Let me know how you do. Take care, everybody. This guy's buying Kathy Wood's funds. Yeah, go get some ARC F.